line and just take like a minute, minute and a half, tell the audience who you are, what you do, and then we'll get moving into the first topic.
Okay, thanks a lot, Jason. First of all, I feel really lucky because I'm the only man on this panel in this round table, so I'm the lucky ones, and it's a pleasure to share the round table with such amazing women. And well, I'm Fabrizio Villani since 2013 after a master degree in environmental resource management, specialization in energy studies at VU University in Amsterdam. I end up in fintech. I don't know if I end up in fintech for the good or for the bad. We will see. But since then, it's already 7 years. I've been working in fintech, and in 2017, I started a Fintastico that wants to be the TripAdvisor of innovative financial services, and we are mapping out also some green fintech solution out there.
Excellent. Fantastic. Glad to have you here, Fabrizio. April, how about you next?
Yeah, hi from New York. Thanks to Dirk. I'm excited to join this panel today. So I'm the founder of a wealth marketing firm that works in the wealth tech and fintech ecosystem and helps map large financial institutions to smaller fintechs and wealth techs globally. We also help with brand awareness and many different campaigns to help users, customers, and clients, right, find everyone who is in the ecosystem. So we've been doing it, as I said, for about 12 years, and I work with many different clients all across the globe, and the larger fintech, and then in the smaller category, which I'll call fintech. So thank you for having me.
Absolutely. Glad to have you here. Thank you so much. Talia, how about you?
Yes. First of all, thank you for inviting me here. I'm very glad to be amongst all these experts. So for me, my background is purely investment finance. And then when I discovered blockchain, I completely fell in love with it. So I decided to become a blockchain entrepreneur. Ever since, I've worked a lot with universities from Toronto, Canada. And so a lot with universities, helping them with their educational platforms, helping build their incubator programs, and then eventually building or launching my own firms and organizations. So right now I have Enough in Consulting, where we do education strategy and implementation of blockchain projects, and also have a not-for-profit, which is called The Innovative Financier, which is more of a platform to connect various stakeholders in this ecosystem.
Excellent. Wonderful. So glad to have you here as well. Nicole, how about you next? Tell us a little bit about yourself.
Great. Thank you very much. Good afternoon, good evening. I don't think it's good morning to anyone, but we could be in for a surprise. Okay, there we go. So Nicole Anderson, I am founder and managing partner of Red Ventures. Red Ventures has an interesting history, albeit all financial services orientated. We began our journey about 8 years ago, focused on inclusion, so building startups through a venture studio model, focused predominantly on the sub-Saharan continent of Africa. And then about 3 years ago, transitioned to a global mandate where we moved away from the impact side of fintech to green fintech, working from mostly in Scandinavia, actually. So we went from, take this in the right way, from everything that was hot and dangerous to cold and civilized. So we had a complete mixture of exposure to fintech business models that really had true impact. We also are now able to make direct investments ourselves. So we not only build ventures, but we make direct investments into business models that are in the green fintech and impact fintech space.
Fantastic. Wonderful. Glad to have you here today, Nicole. Anna, how about you next?
Yeah, sure. So I'm Anna Pobrezhna. This is how it sounds in reality. And Ukrainian, so it's a bit complicated for the Western world to pronounce when it comes to Z and H. But hey, it's not about that. So yeah, thanks for inviting me. And I know that's Nicole as well. Special thanks for introduction. I've been in their technology and sustainability sectors for probably 5 years now. And my journey was starting from their construction and infrastructure and moving into the digital construction and infrastructure of sustainable ventures. So I'm building right now the third startup, but it actually, in fact, it's the first startup which I started 4 years ago myself and pivoted from that. So we right now dedicated to enable sustainable transformation of global water value chains and mobilizing climate and ethical investments into the water infrastructure in the private sector. So that's our mission and that's our goal. And to be honest, there's basically a huge gap of 2.5 trillion water infrastructure finance gap, which we're aiming to close by 2030.
Fantastic. Wonderful. Really glad to have you here today as well, Anna. And Louisa, can you tell everybody a little bit about yourself? I know she's in here. Louisa, can you hear me? Well, shoot. I'm not getting any audio from Louisa. All right. Well, let's go on, and if we can solve some audio issues, I'd love to come back to Louisa here in a little bit. Let's go ahead and move into our first topic. So right before this wave of COVID-19 kind of overtook the world, right, and that's been really the sole focus of everyone for several months, and that seems like maybe that storm is settling a little bit. And hopefully we're moving towards a place where it's no longer a big concern. But right before that, the world was kind of taken by storm with the thoughts of talks of sustainability and climate change and Greta Thunberg, who really, I mean, made headlines, was Person of the Year, and made a huge impact. The question that I have for the panel is, after this is over, will we see a return to that focus, or will that focus be lost in the craziness, if that makes sense? Are we going to kind of move back to a more of a bigger focus on sustainability after we weather the COVID storm? And there's no particular order. I'd say anybody that wants to take a crack at it first. I want to get to everybody on each question. Let's just maybe keep it to, like, 2 minutes, 2 to 3 minutes a question, and on responses, and we'll keep going. So who wants to take a crack at that first?
I don't mind.
Okay,
let's go Nicole, then Fabrizio. Let's do that, and then we'll keep it going.
All right. Well, I think the topic of sustainability is so broad and wide, and the COVID crisis has really been an acceleration or acute use case of essentially structural changes that fundamentally have not been in place from the financial value chain, all right, the global financial value chain. And from that perspective, I mean, institutional capital markets right through to you and I, as in terms of consumer finance. And I think the easiest thing for me, because I live in this world all day long, is to actually try and extract the value and also some of the very acute pain that we've seen in the last 2 to 3 months, just, basically systemic pain, trying to stop the flow of a financial system that's hemorrhaging. So what I mean by that is, we are seeing radical flips and changes in equity markets globally. I think they're 30% down. We're seeing monetary policy globally really not being able to step in because really monetary policy relies fundamentally on shifting rates, and we can't take those rates down anymore. We're seeing liquidity was tough anyway post the financial crisis. We're now, even more acute, and that is, I think, demonstrated everywhere, certainly where I am based in the UK. Lending coming from the government has been effectively blockaded by the traditional financial system because they can't move fast enough, which is creating, far-reaching pain. And so, I think we've got to look at sustainability. That hasn't gone away. I think what we've got now is we've got the almost the biggest gift, so to speak, as innovators, traditional financiers, incumbents, policymakers, and regulators, to actually learn the lessons. But unfortunately, a lot of the damage is done and will continue to unravel for months, if not years, or potentially, if you're really negative, decades to come.
Absolutely. I think I agree with that some of the damage is already done. I'd like to go to Fabrizio next, and then it looks like we have Luisa now. So I'd love to hear from Luisa, and also Luisa, if you would take a minute to kind of introduce yourself to everyone after Fabrizio.
All right, so I go first, and then we try with Luisa. Well, in my case, I've been burned already with sustainability once, because I moved from Italy to Amsterdam in order to study sustainability. It was back in 2011, 2012. It was Obama times, with plenty of green jobs out there everywhere. But unfortunately, when I graduated in sustainability in Amsterdam, I couldn't find a job in sustainability. The only jobs that were there were in finance or IT, computer science, and by luck or lack of luck, I still have to figure it out. I end up in fintech. So my point of view is that right now, as Nicole states in a correct way, the monetary policies are more focusing in reducing rates or allowing countries to receive the funds as soon as possible. But the problem is that no one has a clear green strategy for the future. So eventually, I believe we still have to wait for another Greta Thunberg or another Obama that will step in and change again the landscape, because right now the landscape is just focusing on not losing jobs, not closing down companies, and so on and so forth. Of course, it's also times for entrepreneurs and innovators to change the status quo, but without the right regulations in place and the right supports, is going to be complicated, especially because besides the fact that equity are down 30%, unfortunately, there is also the point that venture capital and private equity are also closing down their funds a little bit. They are mainly more focusing on their portfolio companies or portfolio startups, depending whether they are VC or private equity. So let's wait, and hopefully we will have a new soon.
Absolutely. We'll kind of wait and see. Luisa, do we have audio now? Can you hear me? No, I think we're still missing audio for Luisa. So we'll move on. April, I'd love to hear from you, and then we'll go to Talia and Anna, and then we'll come back to Luisa and maybe move on to the next topic. We'll see.
Sure. So, I mean, yeah, no problem. So that's a really broad question and a broad topic, as Nicole and Fabrizio were talking about. I think, unfortunately, when in 2015, when the UN announced the SDGs, we were at a different point in time and a different point in our economy. And I think now the idea of stability is really subject to a sort of a redefinition where we have to just sustain ourselves, right, without growing, right? But being able to sustain our own families, sustain our own businesses for small businesses, and sustain, and I think that also applies to some of the bigger banks and financial services institutions that, particularly in the US, have been bolstered post 2008. So, we've had to rely on these big financial services institutions. So consequently, the emphasis on fintechs or growing fintechs, as Fabrizio was saying, really hasn't been there. They are sort of on sale or at reduced rates for those big firms that want to take a look and partner up with fintech. So I think in that standpoint, from that standpoint, it's a really good opportunity. I think it'll also, add quite a few people to the job market. So the sustainability for fintechs are approaching the market could be very good because there's a lot of talent out in the marketplace right now. But I think that for the moment, while the future is sort of unclear, you find millennials and other people who are more interested in funding and some of the VC money and private equity money sort of sitting on the sidelines and waiting to see what happens, at least for the time being. I think it's a time when people are sort of hunkered down and sustaining themselves.
Absolutely. I'm definitely seeing a lot of that just kind of wait and see approach, especially from, from big money and investors. So yeah, I think you're right on that. I agree. Talia, how about you? What are your thoughts?
Yes, so I think I will second what all of the previous panelists have said, that with this with this environment, a lot of the governments are no longer focusing on as much as on the SDG goals, although they're still very much a priority, though not the number one focus. Right now, the number one focus of most governments, including the Canadian government, is really to help companies, domestic companies, provide support, PPE support to the healthcare system. However, I'll say that what I have noticed, at least in my market, is that although the investment pipeline, the private investment pipeline, seem to be drying up right now, there are still opportunities for startups to tap into government funding, and also opportunities to for startups to actually look for more creative ways of getting those financing. Maybe instead of going directly to investors, maybe partner with companies that are more established and that have an easier access to funding, partner with them, propose their services to them, and become basically their service providers. So who says service provider says client, and who says client says revenues. And when you have revenues, you actually have some type of capital to allocate to I'll say any innovative project that you might have. So yes, right now it is very difficult for 1 second. Actually, I had put my timer on, so I'll know if I was going over the 2 minutes, but it is very difficult for brand new startups to find funding. And so it is time to look for creative ways to make that happen. But there are opportunities. As far as the future is concerned, again, nobody knows, but in 2008 with the recession, it was the best projects were created out of that challenging time. And so again, we are in unprecedented and challenging times, and a lot of great projects are also going to be created out of this situation. So
absolutely, I agree with that necessity is the mother of all invention, right? And we're at a time where there's a great necessity for this, for these types of solutions. So inevitably there's going to be solutions that surface, right? So thank you for that, Talia. I really appreciate that. Let's go to Anna. I'd love to hear kind of your thoughts on, again, that we're are we going to have a focus on sustainability after COVID is kind of, subsided? And then I'd love to hear from Louisa after that.
Dana, okay. Can you hear me?
Who's going now? Sorry.
No, Jason, you're on mute. Jason, you're on mute.
Every time. That's like the third time today.
I saw the previous round table, so I know.
I'd love to hear from Anna and then Louisa, but Louisa, we have audio. I was able to hear you, so we're making progress. Excellent.
So yeah, coming to sustainability, I think the COVID crisis didn't outshine sustainability. To be honest, it has been always the best sustainability issues in climate change, environmental or ESG, environmental, social aspects have been always on the background. And I think just COVID basically made us even more naked and more vulnerable to their economic and social and environmental issues, and not just somewhere in the third world countries like Syria, where the systemic risks do exist due to the political instability, war conflicts, and social unrest. But it's also the Western world which now woke up to the basically uncertainty and would face recession much faster and unexpected way than it could have been predicted. However, I would say on the positive note, there's already been said, fintech generally green initiatives will find their way, and I think it will accelerate as well, because we can see that ESG or basically green investments outperformed all the traditional investments. ESG ratings in G indexes have behaved much more stable than anything else. We can see that, for instance, that also there's a tremendous drive of commitment to sustainable investments can be observed from investors. And we see it because investors, different type of investors, as assets owners, asset managers, and we can see that there's big influence also, or their type of their not the communities of their basically generations, which are, so there is old money, there is new money, and there is basically younger generation which is coming up and asking for more transparency, for more responsibility, for ethics. And I think there is a huge potential for good investments, for investments for goods, which will also correlate with positive returns. Also, we need to be very much realistic that there will be, as Nicole said, the damage is already done, in addition to what we have had by now. And we just need to focus on we need to prioritize probably those areas and those basically sectors which where the damage not just been done, but where the damage actually can be irreversible. And everyone is talking right now about the water is the next oil, and water has been the next oil for a long time. And we can see it, land use, clean air, natural capital. Those are the topics that's gonna be probably on the front pages, and we need to accelerate innovation and accelerate inclusion in terms of their strategic decision making, policy changes around those areas to make things happen and walk the talk, not talk the talk. But I mean, there are some interesting examples. For instance, like Ant Forest. It's a Green FinTech champion that's with 5 million users have planted already more than 100 million trees. So there are some amazing examples that's actually connecting end consumers and communities, regional, global communities. and making it profitable in the same time profitable. And so we need to move away from this just charity thinking, but also to their probably strategic growth of people, profit, planet, and of course peace.
Excellent. Very good. Thank you, Anna. I appreciate that. Luisa.
Hi. So can you hear me finally? Good. I'm happy.
Yes. Yes. Glad to have you. So would love your thoughts on that as well. But first, just take like one minute to just kind of tell everybody who, your background, just so that they kind of know where you're coming from as you're speaking. And then the first topic we're talking about is, again, just will the Greta Thunberg effect remain after we move past COVID, as far as that focus on sustainability and fixing the planet. So
yes. So speaking about me, I have a long background about finance, and when I did my master in environmental economics after 10 years in the finance world, I saw that there was gap into sustainable finance, so the mismatching the two, sustainability and finance. So I founded Sustain Values, that is a think tank about sustainable finance. I'm speaking about 20 years ago, so it was something that was really new. And I didn't call it sustainable finance, but green finance, that is not just about caring to environment, of course, but it's also caring about how the environment impacts on humanity and how humanity impacts on the environment. Because if you think in a very simple long-term investment like building or buying a house, you have a budget, so this is the economical point of view. Then you have the environment, so you want to live nearby a park or with a beautiful scenery, and then you have also the social environment, so you want to live in an environment with schools or your friends or whatever, not nearby a prison or whatever structure you think it will be. So those 3 points make also the base for sustainable finance. And so I have also my own definition for sustainable finance, that is financing sustainable development. And to finance sustainable development, you need an efficient market, but this is an efficient market exists only in theory. So when you impact on the market with policies, you need risk management to make the market efficient, and also ethics, because when you manage the market through risk management, you need also to take care about, as an example, the big example for ethics for the future, take care of the future generations. So Absolutely. This is, let's say, the technical introduction. So I'm caring about the sustainable finance, as I said, implemented globally around the world. And this is my passion, and it is what I think is the next future. So thinking about the future, we can say the instruments to go around to implement the sustainable finance in the future is, of course, fintech. Fintech is not just green because it doesn't have a real impact like building a plant, because it's normally online, but it's also the future to have digitalization, to have different products, and to implement, as an example, what we are experiencing by now with the COVID, is having a different mobility, to work remotely, and having also a different impact with the environment and socially. What we can say about the COVID, that is socially, the impact was quite negative, but it was quite positive to the environment. So there are the good and the bad that we can take from this experience to go forward. And of course, the good ones is what we can ameliorate in using better the resource that we have, that it sounds quite obvious, but it's not if we think about innovative way of using our resources. So the different ideas.
Louisa,
Yes.
if it's okay, you kind of, I think you started going into our next topic a little bit. I'd love to give the other panelists an opportunity to share their thoughts on that same topic. Is that all right?
Okay.
Yeah. So kind of to the rest of the panelists, let's move on to the next topic, which is, what is your definition of sustainable finance? So Louisa has kind of gotten us started with her definition of sustainable finance. I thought it was pretty strong. I'd love to hear some differing perspectives. Let's start with Fabrizio, and then Nicole, and then we'll just keep going from there.
Well, as Nicole stated at the beginning, sustainability is a broad term and also subject, but with respect to sustainable finance, I believe we can all agree that refers to any form of financial service integrating ESG criteria into the business or investment decisions for the lasting benefit of clients and also society at large. Some examples of sustainable finance can be found in sustainable funds, green bonds, impact investing, microfinance, and I believe here Luisa, she's an expert in microfinance, correct me if I'm wrong. Credits for sustainable projects, development of financing, and so on and so forth. All the fintech and also, let's say, financial instruments connected to build a better world in the long run. So with a medium to long run view and not with a short-term view, and not on a short-term profit view. Because, well, sustainable finance goes much further than just profit in the financial and economic sense. It takes also in consideration environment and people and society. So we should try as a society to focus more on this kind of solution instead of other instruments that are just speculative and don't make any good for the environment and for the planet. This is my opinion.
Excellent. Thank you, Fabrizio. Nicole, how about you? What are your thoughts? Sustainable finance. What's your definition of sustainable finance?
Well, I think Fabrizio did such a brilliant job. I really don't have too much to add, but perhaps for those who are unfamiliar with the world of sustainable finance, it can become very confusing because terms like green finance, sustainable finance, circular economy finance are all used interchangeably. But essentially, how I started my journey in this was, given the fact that I've always stood on the side of money coming in to disrupt finance, all right, through innovation, I've always looked at what is essentially fundamentally broken in finance. And if you look at it that way, very simply, what has happened with generations, if not centuries, of financial services is that it has become an industry in and of itself. And, I am obviously generalizing hugely here, but the self-serving mechanism of financial services is 180 degrees away from what essentially finance is there. As financial services intimates, it is there to serve communities and industry. The difference now with sustainability is it is much more responsible finance. It has to consider the impact of where that money, capital, investment, or loan is going, and what considerations it would have short and long term, which, to Fabrizio's point, means that the metrics of success are different. They are beyond just an upticker on alpha on an investment. They have to consider a lot more in terms of the definition of impact. And of course, we could go on all day on what is impact, but broadly speaking, that is how I like to look at the combined word and implications of sustainable finance.
Excellent. Thank you so much, Nicole. And April, I saw you unmute yourself. let's go to you. What's your definition? How would you
Yeah,
define
so
it?
I guess there's not that much to say beyond what everyone has said. I think, in the broadest sense, mostly when people talk about finance or investments, they think about alpha or they think about returns in terms of cash and money. And I think what green finance has shown us is that the definition can be much broader than that, as everyone's indicated, not just in financial returns, but for other sorts of returns. Unfortunately, I think that's where everything starts to fall apart a little bit because there are no real hard and fast definitions of what is an impact investment or what is a sustainable investment. And I think that's where sometimes wealth managers, investment managers struggle with meeting their clients' needs in terms of finding and identifying certain criteria that makes an investment, in fact, huge to something that is a sustainable investment. So I think, we're at the very beginning of this, and I think what will help move this along is some really standard definitions of what these words mean so that people can actually communicate and then move the ball forward. What one person's impact might be may not, meet the criteria for another person's impact, and the same at an enterprise level for large banks or even at a fintech level. Some people might not score that as being an impact investment while others might. So I think that we need to work on the nomenclature a little bit more so that we're all sort of speaking the same language.
I like that. Good add to that. Anna, I see you're unmuted yourself. Let's kind of get if you want to add anything to that on sustainable finance, and then Talia, and then I'm going to throw this whole panel a curveball. Be ready for it.
So yeah, I mean, the definition is getting shorter and shorter. I'll try to make it even shorter and more accessible to a broader public. So for me, sustainable finance, it's basically linking cash flows in whatever shape or form. It can be debt, it can be equity, it can be other super smart names, which are created by within their types of different financial products. And the recent one is tokenization. But anyway, so it's linking cash flows to sustainable business processes, performances, and impacts, both regionally and globally. So what I mean by that, it's aligning cash flows with company processes, how they do, what they're trying to achieve, by which actions, and measuring their regional performance operations and connecting it to, so it's basically monitoring and connecting that with their global goals and targets. So let's say a specific example. If I'm a mining company and I said that I'm going to cut my freshwater intake consumption by 2030 by 25%. And as a mining company, I might produce a sustainability report and investor, and if I'm a listed company, I publish once a year an investor report. That's it. But as an ordinary citizen, I'd like to understand, citizen of the world, I'd like to understand what does it actually mean in a very simple words without digging into their 100 pages report, sometimes more, understanding their balance sheets, understanding their sometimes beautiful charts, sometimes not. I'd like to, with one click, I'd like to go to the website and to understand where they are on that progress. And where they are on that progress in regards to the global targets, declared targets, whether it's SDGs, whether it's reduction of water, whether it's pollution, air, and how they're doing regionally. So what is actually going on a specific site within the specific region, and how the community feels there? Well, what are the impact on the local community, and who benefits from that? So it's coming back to the philosophy of people, profit, planet, peace, and performance.
I like that.
It's input, output, and impact.
Excellent, excellent. Definitely, the definition is getting shorter. I agree. Talia, do you want to add to that as well?
Yes, definitely. I think. Can you hear me? Okay, great. I'm unmuted. So I think I'll be repeating some of the words of my co-panelist because, well, sustainable finance is yeah, it's a short word. So, but what I'll have to say is, at least for myself, is really how do you use finance? How do you use finance to integrate or put out projects that are environmentally, socially, and governance-wise sustainable? So not just finance as that piece that we have to look at and make sure that finance is not negatively impacting ESG factors, but also how can you actually use finance itself to help maybe other industries be more environmentally, socially, and governance-wise more sustainable. So I'm thinking if it's going to be about governance, how can we make things more ethical in finance with investment, but also how can we help other industries be more ethical? Socially wise, how can we help other industries using finance? How can we help those industries be more benefit society more? Maybe finance can be used, can create some type of climate bonds, which I'm sure everybody's already familiar with, to maybe reduce the impact. I was talking about social, but then it ties back into the impact on the environment. So for me, it's really how can you use really finance front end and back end to really benefit society. And I will echo what Anna said before: society at a macro level, at a macro level, at global level.
Excellent. Appreciate
That's
that.
it.
All right. So I want to throw you guys a little bit of a curveball. Okay. I know that on our topic sheet, we wanted to go into like kind of the benefits of sustainability, but honestly, I feel like I've heard everyone talk about the benefits of sustainability and specifically to fintech. So, but I've been prompted now to kind of go a different direction, which is prompted by April, actually, that investors are looking for returns in alpha and sustainable finance. I mean, the real green opportunities in fintech and in startups, they don't happen without money, right? They don't happen without investors. They don't happen without financing of some kind to help get it up off the ground. How in the world do we entice the layman investor or even our traditional VC funds to start investing in more sustainable projects for the future? Because up to this point, I think a lot of sustainable projects haven't produced the same kinds of returns as traditional investments. Doesn't mean that they can't. Just up till now that they haven't been as comparable. How do we incentivize? How do we get people to invest in these projects?
So,
April, well, let's go to April and then Fabrizio. We'll keep it going here.
All right.
So I think that's a great question, and there's no simple answer to that, but a few answers. So number one, people are now looking past investment returns, but looking for investing in passion projects. And so particularly for ultra high net worth and high net worth families who have a lot of private capital to invest in these kinds of things, they have the opportunity to really make an impact, which is another definition, right? An impact in the world by making an investment in some of these fintechs or these green fintechs in particular. I think, the issue is that some of these fintechs are really below the radar, not very well known, not very well funded. So there's a significant gap to helping these firms achieve some market visibility, some brand awareness, so that people and larger firms and families, right, access them. But there are more and more direct deals and other things being made in private equity that are bringing these forces closer. But I think for the time being, particularly in today's markets where things are a little bit precarious, I think it's going to be difficult to convince or entice newer investors to come into this market where things seem very much unstable. That said, there are, thankfully, many people are committed to these kinds of investments, and I think that we can continue to see some flow into those areas. But I think that until things sort of stabilize, we're going to see that probably leveling off. But I think the investments can be made by larger financial services institutions who will have capital and will have the need for implementing some of these solutions that some of these smaller fintechs have.
I like that. Fantastic. Thank you, April. Fabrizio, let's have you go next, and then we'll keep it going. I'd love to hear from everybody, and we're probably going to have to cut it a little bit short. I don't think we're going to get to the last topic, but I would really love to hear everyone's thoughts on this one that we're on right now.
Okay, so well, in Fintastico we have 17 categories with different fintech layers in crowdfunding, payments, blockchain technology that is used in banks or insurance company. In sustainable finance, we might have sustainable payments, sustainable lending, sustainable investing. And with the respect, looking at sustainable investing, there is a nice report made by KPMG in February this year. It's called Sustainable Investing KPMG. You can find it for sure. In this report that I had the opportunity to read it, they state that 44% of ESG-oriented hedge funds can deliver alpha and also manage fat tail far-off risks. So, I mean, there are currently some surveys and also studies that are trying to prove the benefits of sustainable investing. One of the main critic points that Anna touched a little bit before, I think in her answer, is that the reliability of the data, of the sustainable data. We have some problems with data. We are not yet able to track all the nice charts in their sustainability reports. And another critic point from my perspective, something that I learned in Amsterdam, is the concept of greenwashing. So fake it until you make it green, eventually in this case. And one of the risks that I see also with fintech, not in concrete with sustainable investing, but eventually it might be also a problem with sustainable investing and then also with sustainable finance, is the concept of fin washing. There is too many institutions out there, or too many fake fintech companies that are pretending to offer a transparent product, transparent service, or a product that really care about the environment and the planet, while at the end of the day they keep doing all the time the same old stuff that we unfortunately all know. So if we solve the data problem, we will increase transparency, and then we will also increase the reliability of the studies that are currently trying to prove that sustainability also make money, make ROI, that it's important for some wealth companies and also individuals.
Excellent, excellent. Does anybody want to add to that? How can we incentivize the people with money, whether it's individual investors, institutions, venture capital funds? How do we incentivize investment into sustainable ventures? Luisa, I see you unmuted.
Yes. So as Fabrizio said, it's important to have to add, let's say, to the financial value, the non-financial value, and this is what the EU is doing right now with the taxonomy. So there is a huge movement around sustainable finance that is to define what is a green investment. And this is very useful because normally now the big investments, so the green bonds that Fabrizio said before, and the all investments in green finance were just through trust funds to not even the pension funds, and just the green bonds and everything. He was into windmills, solar panels, and this kind of investment. So the question I will try to, there are, let's say, two markets. One market is, as we said, the green market that was subsidized. And so now to get these markets up, applicable, so this market really competitive, as I said before, we need to look to efficiency, to risk management. It's how to make this market effectively competitive, and so to show the benefit for this green market that was highly subsidized, and to become, let's say, a normally competitive and profitable market. And for this, it should be quite easy, because we have the taxonomy that define what is green, and then we have the benefits that can be reduced, and so the subsidies that will be reduced, and so the benefit for this market that is becoming mature. And so, as an example, the solar panels now is just 6 years to become productive. That means that we are getting there, so it's just a question of time. The other market that is more difficult to address, it would be the market for, let's say, the transition for the normal market that should transit to a green market. In this case, the benefits are more difficult to be evaluated, because why having, I don't know, as an example, a certified a desk that is made with a certified wood, it's more expensive than a desk that is not made with certified wood, and what is the difference, and how I can benefit of having a desk that is made with certified wood. And so in this case, to evaluate the benefits, we really need to follow the second stage of the taxonomy that will be probably there, and so to define the non-financial values for this kind of economy. And in this moment, it will be easy to see the benefits, and so to have the possibility of investing in this kind of in the transition of the economy. Now we are in the middle, and so normally people that invest in this kind of investment, it's people that or investors that they do it because they believe it, and so it's something that is more into I could say it comes from morality of the company, or from morality of the environment, and from the customers that they push in this sense, and that sense. So it's not something that we can formalize, but I'm really positive that that is the trend, and so that would be. And I think that, as I said before, that COVID and our situation is pushing towards this movement, is supporting the more, is supporting, as I said, the moral push towards something that is clean, something that is green, something that is more sociable. And so this is also, the other businesses that we were talking about before, and so referring also to the fintech. I don't want to take the floor for me, so I'm sorry.
No, I appreciate that, Luisa. So you guys probably noticed that at the time, technically we only have 2 minutes left, but if everyone's okay with it, we could go another, 10 minutes or so, just so that I can hear from everybody else. But this will be our last topic. We're not going to get to the last one. This is just kind of the nature of it when we have ideas that are being shared. So is that all right with everyone? Does everyone have another 10 minutes or so? Is that all right? Excellent. All right, awesome. I would love to hear from Talia, Anna, and Nicole. How do we incentivize investors? How do we get people to invest in these projects, even if maybe they're not going to return, the same monetary returns as they might get elsewhere?
Yeah, so I think that sustainability has always had the same sort of negative assumption that if you invest in sustainability, you're not going to make money. And it can actually be related to also innovation. Innovation takes us a lot of time to actually produce revenues. So if you invest in innovation today, you might only make revenue in 10, 20 years. But the good news is that you'll make maybe 100 times more than if you hadn't invested in innovation. And so I think that for any investor, it's always about what's in it, what is it in it for me? How can I make money? And so in my opinion, the way to do is, again, to show that it's not just about making $10 today, but if you actually invest in sustainability, you might not make $10 in the near future, but in the far future, you might make 100 and more. Of course, I'm just a relative. Yeah, I'm just really putting things into perspective, and it's also about showing that actually sustainability might actually bring what it might bring more common profit sharing. You know, a lot of countries, for example, right now are struggling with poverty. They're struggling with being able to provide jobs for the millennials, for the young workforce that is coming up. But sustainability might actually be the solution to solve those issues. And so it's really putting things into perspective for the investor. Whether the investor is institutional or a retail. And actually, I wanted to also point out that often sustainability is also assimilated with high cost, but then again, it's about putting things into perspective. Suffer today and gain more tomorrow.
I like that. Perfect. Thank you so much, Talia. Nicole, Anna, I'd love to hear from both of you as well before we close today.
Anna,
go ahead, Nicole.
ahead. Oh, okay. All right. So I think we've heard a diverse, spread of views. Maybe I can take a different tack. First of all, sustainable investments come in many forms. This panel I had assumed was predominantly about Green FinTech and its role and therefore its investability. So let me take that stance because that is what I actively direct investments to, right? So that's my game. And the opportunity is the triggers for investing in FinTech, not only in this period of the pandemic, but just before and certainly well after, is a number of drivers. The industry itself has to structurally change. So our thesis, our investment thesis, is based on basically, if you can imagine, an inner wheel and an outer wheel. What are the structural changes that finance in all its glory, whether it be insurance or lending or digital banking, how does that have to fundamentally shape and form in order to appeal to its clients or consumers or customers? And then up the financial value chain, what are the shifts that need to be made operationally, structurally, in order to service finance? So unlocking capital, making sure that fund managers have essentially the transparency and the integrity of the right data, not just reporting. That in itself is huge. And how key value chains, costly value chains, and collapsing the mindset of savings to change post this pandemic. We will see, I believe, but globally, I sat in how structural change, people are really thinking about this. Aids, as I went back right to the beginning of mine, it's how does finance help the transition of industries that are crucial in the world, as we world or net carbon zero, zero carbon world, fundamentally needing to change, whether it potentially on the brown scale to a greener status, however that is defined. So I'm hoping this is a positive note to say I don't think that investment is drying up. It's just needing to be pointed where the pain and the gain is. And those areas are definitely fueled by the industry structurally having to change and regulation coming as a pincer move into this world in a new way.
I like that. I like that. Very, very, very different opinion there. And I like it. Good perspective. Anna, can you wrap us up here? Just your thoughts. How do we engage investors? How do we get people to invest in green fintech, just these new sustainable ventures? What are your thoughts?
So I would come from the probably definition. What do you mean by investors, and what do you mean sustainable ventures? Because again, we have different type of investors. We have institutional investors, we have retail investors, we have VCs. It's a very, it's not fragmented. It's very different. It's a multi-layered structure of the funding. And for instance, not necessarily always it's interconnected. So if anyone comes to a bank and say like, well, I have a startup, or I have this brilliant idea for 1 million, well, it's unfundable until it gets to the certain level of their stage in commercialization. So the problem here is, what is a bankable project? And this definition has to be revised because of their system, historically, it's a historic heritage where certain projects are simply unbankable because of their way of how finance has been done in the past century. And in the last 100 years, if not more. That's one thing. The second thing, incentivization mechanism. So again, what are the projects and who are our investors? We always need to understand, come from the perspective who and why, who we're talking to and why it's investable and how it's scalable, right? And I'll give you an example. So there's many initiatives around the innovation for the local markets, for instance, sanitation in India. And the problem is huge. However, even Bill Gates failed to build this, his idea around the toilets, right? And to create these toilets to satisfy the needs of the sanitation needs, which are primary to some extent. And he appealed to several universities. And no one was interested until it became a commercialized, sort of way, commercial idea. And because, again, we need to understand and we need to break this silo between, or Chinese walls between, that sustainability or impact is not about the profit, which is. So by having this, by basically including, by changing the whole kind of, creating the paradigm shift where it's sustainability, impact, or ethical investment equals profit. I think it's something that has to be addressed continuously. In the same time, it's a matter of not just trying to incentivize investors, it's actually connecting their public and private markets, because if we talk about their investment opportunities in the infrastructure, we need to understand the risks. It's not just about creating their profitable roads or profitable hospitals. It's a much more complex question where different types of investor have to come together and create either a club deal or a syndicate deal, or there are many fancy words which I'm not trying to use for larger public, and to make this happen. And I think democratization of the finance, which is also a bit of overused way of saying, is another way of bringing in investments where it was very costly to do so because of the transaction costs and because of the high risks and high volatilities. And I'm talking here probably about their very old instrument, this called securitization, which is now can be open for the secondary markets and for the retail investors through tokenization. And I'm not talking about any kind of crypto ICO, I'm talking about actual traditional way of securitization, which can be then that can be actually open to the larger market and to the secondary market. And I think that's is something that is ordinary people cannot do. And this is, I totally agree with Nicole. Those instruments simply were not available because of their lack of necessary policies, a lack of necessary innovation and technology developments. Right now, technology is much far ahead, furthermore ahead than this certain policies, and especially in certain markets. And I think that gap has to be addressed, and through either sandboxes or through certain of piloting projects. And by that, step by step, the incremental change will create a dynamic shift of the whole kind of system. But again, we shouldn't be expecting it as an overnight change. And everyone was talking about the cryptocurrencies, how it's a new big future overnight. And we could see the result. No, it's not. It hasn't. Everything has to have legs. If we really want to make fundamental changes and the deep root changes, not just another hype, that has to be at the complex thinking, which should involve incremental changes and basically piloting that step by step.
Awesome. Awesome. I loved all of those answers. Again, sorry for throwing you guys a curveball, but I heard some really passionate answers in there. So I think it was good. Thank you so much, all of you. Thank you for being here, for taking your time. Sorry we went over a little bit, so thank you for sticking around and sticking through it and putting up with me. Fabrizio, Nicole, Anna, Talia, Luisa, April, thank you so much for being here, being a part of this. And I can't wait to have all of you back for future events. We like to do several of these every year. Would love to see all of you again. So just thank you so much for being here.
Thank you
for having me.
Yep.
Bye.
Yep. Nice meeting all of you.
It was a pleasure.
Absolutely.
Stay FinTech.
Bye. Bye.
We'll see
Thank you,
guys
Jason.
tomorrow.
Bye.
Bye bye.
Thank you. You too. Bye bye.